Hey, everybody. I'm welcoming back an old friend of the show's, Marc Rutzen, who is now with a new venture, which I can't wait to hear more about. It's HelloData.ai, right?
Yep.
Okay. Because HelloFresh was taken. So you had HelloData. Okay. So let's kind of give a recap of your of where you and I met. So you tell me what you were doing before Enodo. How'd you get into this world of data and analysis? Don't tell me you were one of these guys that went to college for, you're a data scientist.
No. I was a real estate guy.
Oh,
Just
okay.
like you, I was looking at deals. I did development in the first part of my career. Started in 2011, which was a phenomenal time for real estate development.
Yeah, exactly.
So I was doing like neighborhood stabilization program deals, like stuff that actually had funding. Did a master plan development in Moline. That was a cool project. Did a lot of market analysis, and it was very time consuming. And I kind of realized in doing that and a couple other jobs I had afterward, it was just a lot of manual work. And I couldn't fathom how manual real estate was, right? So I thought there must be a way to do this more efficiently. I started to read up on data science and engineering, learn to program a bit. Ultimately, saw an opportunity in the amenity wars in like 2016, 17 to basically price amenities, right? If we could aggregate all this market data and tell you if you do the granite countertops, the hardwood floors, the roof,
yeah,
what more rent do you actually get? And that was the foundation of Enodo, which was our first startup.
right.
Yep.
And I remember that about Enodo. That was really cool that you could figure out if we did this, we could expect our NOI to increase by that. That was pretty cool. So you saw that nobody else was doing that, and then you guys came along and figured it out. Now, tell me how do you start a business like that?
Well, I was less experienced at that point, so I went looking for interns, right, from the top colleges in Chicago. So I was going to Northwestern, University of Chicago. DePaul had a pretty good data science program. So I went to all these different groups and basically asked their professors, like, who's your star student at web scraping? Who's your star student at data science? And I found them that way, as interns to start, but they built the foundation of the company. And then, the craziest thing, Tim, who's now my co-founder in HelloData, he was 18 when he started working for Enodo. And before he graduated, he got his check from the sale of the company.
Isn't that cool? That's awesome. That is great. So, all right. But I mean, you were still working for somebody else, or how did that work for you?
Well, so we sold to Walker Dunlop in 2019. They didn't care as much about the amenity premiums, but we could process rent rolls and operating statements very well with bill. And they had such volume. I think that the year I left, earlier this year, they were doing like 40. Well, year before. Marcus tanked this year. Not so high volume. I'm sure they're not doing this.
Right.
But like when the last year that I kind of tabulated figures for it, it was like 40,000 documents run through the system by just Walker and Dunlop and their teams, right? So big efficiency boosts, because to do that manually, well, you know how long it takes,
right?
But ultimately, we built out internal tech for them that was really great. We took Enodo to its logical conclusion, built a platform called Galaxy to help source deals for loans that are reaching maturity. All this stuff worked really well, but at the end of the day, I was there 4 years, and I was kind of itching to get back in the startup world. We're back at it now.
So tell me, just you build this tech company, data company, and do you just, hey, Willie Walker's on the phone, he wants to talk to you? Is that kind of how it went, or you got a call from some business broker, or how did the two of you meet up for the sale?
interestingly, we were going to go raise another round because we had a team of 10, and we were trying to grow the team, do more faster, that whole thing, and they had expressed interest in investing in our round. And on the call where we were actually going to talk about terms, they're like, "Hey, you know what? We actually might just make you an offer. What do you think about this?" And I was like 30 at the time. I'm my first exit. I've been selling this thing. I've been on the market for like 10, 11 months. It hasn't been that long, after we launched the product and we got the offer. I'm like, that's a pretty good outcome. Okay, let's do it. So we did it. We brought our team over. We scaled the team up from like 10 to 40, 50-ish, somewhere around there. Yeah, it kind of fluctuated, but we're above 40 after a couple of years of doing it. I rose up to chief product officer. I was overseeing data science, product owners, and customer success groups. And it was a really good experience. Being on the other side, it was pretty cool seeing people pitch me on their data. I was like, your data is okay. It's not great.
Yeah. I tell you that's and just so everybody knows, it was right after Walker Dunlop bought you guys, and you stopped taking all my phone calls. I noticed that. So huge in the industry. So that's so good. Good for you, Mark. I love those good stories. Now here we are today, not talking about Enodo anymore, because like you just said, you got a little, you got ants in your pants. You got the the entrepreneurial bent in you, and you want to do something again. And so in this case, one of your employees, I think was maybe Tim, your guy Tim, he went off, left Enodo, and started doing this new thing. And
Nico, yeah, my first
yeah,
hires at the last one. They got the itch sooner than I did. Left and started building stuff, and I'm like, man, I really want to join those guys.
Good for you. Good for them. Okay, so now what happened is, tell me about this new product. What's different about it? What are you doing now?
Yeah, so similar problem set, but we realized some things the first time around. We focus mostly on acquisitions and value add first time around, right? And developers started to be a bigger portion of our base because they wanted to do market analysis for like new developments. Problem with that is everyone wants a case study on how effective it was on the development that will take 5 years from concept to like lease up, right? So how do you do a case study off that to prove that we're getting the right amenity values? Right, like that. So that was kind of a barrier. Our target market was different. Plus, God forbid, interest rates go up to 8%. Deal flow tends to slow down a bit. So if you're only acquisition focused, you might not have that much deal flow and many people trying to buy your product. So we realized that this time around, pricing individual amenities doesn't really make sense. Residents look at the cohesive package of amenities. And so we moved to computer vision, where we can analyze the listing photos in real time, extract the condition and quality from the photos to help surface the most relevant comps, right? So that was a big game changer. And then we pivoted from, instead of focusing on acquisitions, we focused on asset managers and property managers who need to set pricing every single day. And so those groups, we really thought that was going to be our only focus. But surprisingly, the acquisitions teams are coming in more and more. Actually, they're like half our customer base. And the reason why, the old adage of you look at 100 deals, make offers on 10, close on 1. Well, now they're looking at 150 before something pencils, right? Making offers on 10, hoping to close on even 1, but it's hard to find deals that work right now. We're kind of at a weird spot in the market.
Okay, now one of the things you just mentioned that I thought was really cool is this concept of the system is able to look at pictures of apartments.com of the property, and you can gauge the quality of the asset, or you can determine if one property compares to another property as far as even the fixtures, or like, how does that all work?
So we're analyzing, so from the room, and we train this algorithm with data from ourselves and our significant others and friends. Like it was cobbled together initially on like a very like close group of people doing it manually, right? Now we got people that we pay to help label photos and stuff like that to improve. But initially we got it off the ground by looking at thousands of listing photos and thousands of appraisal photos, labeling the room type, the amenities that were present, and an objective measure of the condition and quality, which we got from basically looking at like the most dilapidated old bombed out sort of unit in the worst neighborhoods throughout the country, and said that's a 0. And then the penthouse luxury New York high-rise apartment, that's a 10. Everything falls between that, right? So using that approach, making it absolute, we can look at photos across any property in any market and score them in terms of condition, quality, and attributes. And that is, you know, when residents are looking at where they want to live, what they look at: location, price, and how does it look? Do I want to actually schedule a showing? So that was a huge differentiator. It is a huge differentiator because, you know, I'll tell you, I did a demo a few weeks back where it was a 1940s property, and did not have, there's no like year renovated or anything publicly available. It was just 1940s deal. I run it through the system, and I'm on a demo with this guy. It's his deal. I run it through the system. First thing I see is a comp from 2010. Next is a comp from 2011. I'm like, oh my God, it messed up. Something's broken here. This is wrong. He's like, oh, that makes perfect sense. We bought this 2 years ago. We gut rehabbed it down to the studs and just redid everything and finished the lease up. And we went to the property websites for the two that I pulled as the top comps, and for his is exactly similar finishes, right? Like everything is, from a resident's perspective, they're exactly the same, even though these are built more recently and these are older. From a finish perspective, they're the same.
Very interesting. So, you know, another thing that you mentioned is the rents, and you know, it almost seems like, you know, I deal a lot with hotels now, and you know, their systems are such that their rent, their you know, rates fluctuate on a daily basis, sometimes even hourly, and that's the way that the hotel world works and has worked for a while. That's not the way it is on multifamily. But are you saying, like right now, when you know, you want to find out what your competition's rates are, they'll advertise it in apartments.com, like call for the rate, because they are moving those numbers on a regular basis. And is that what your system is doing for them?
Yeah, so essentially what we're doing, we're collecting data from thousands of property websites and several different listing sites every day, right? You have to do it every day because a properly priced unit could enter the market on Monday and it gets leased on Thursday. If you're surveying weekly, you missed it. If you're surveying monthly, you definitely missed it.
Yeah.
So we do every day and look at every unit. So the first time it appears on the market, we catch that date and that price. As it fluctuates in price, we catch every fluctuation of that unit's price. Finally, when it is removed from the market, the day it's removed, we have found, and we've compared our data with several clients' rent rolls to pinpoint, like, are we actually matching up? And we're matching up spot on, like 90% of the time. The number that's in our interface is exactly the same as on the rent roll because we catch it on the day it closes, right? And to me, this is how I think about it. In single family, if some guy lists his house for $1 million, no appraiser, broker, investor in their right mind would say, well, I guess it's worth $1 million. He thinks it's worth $1 million, so it must be worth it. Why are we analyzing units that way in multifamily? We go to the property website. Oh, they're asking, 1,500. It must be worth 1,500. It's where it closes matters. That's what everyone looks at. So we just made a way to do that for individual units and price them based on recent closings.
I'm selling my house right now, and talking to the broker, she's giving me a number, a typical broker, and I know I'm where I want to be. And all of a sudden, this house comes on the market that is much better than mine for $100,000 less than mine. And my broker's like, oh, we got to change our numbers. We got to jump. I'm like, wait, hold on here. did you know that guy's going through a divorce? Do you know that he's, about to file bankruptcy? Do you know what his personal situation is? Why do I have to chase after him because he's a motivated seller? That's not how this works. I didn't live in this house for 20 years just because one guy's marriage is breaking up. I got to lose the equity. It's crazy. It's nuts. Typical.
But it's, if you get an apples to apples comparison, which is what our comps algorithm does, we compare the demographics of the local market, the physical distance, the number of units you're built, number of stories, but also the amenities and the physical appearance of it, that the resident, it's basically fusing the investor attributes that the investors typically look at with what residents typically look at. That gets us apples to apples. So like in that situation, a similar situation, something hits the market that looks higher price or lower price, you don't want to react instantly to that. You want to say, is it really comparable? Right. And that's what we do first. Is it comparable? And then where did it actually close? And that's what we use AI to do at scale across the country.
Okay, now is there some ability for you to really get a great number on the occupancy of some of these properties because you're watching these things every day? How does that work?
So we know how many units are currently available at any given point in time, and we know how many units are in the building. We show how many units are available to move in right now and how many units the building has, and that's the occupancy essentially. Now the only drawback with that approach, we don't know if there's make ready work being done or something's
down units
program.
Yeah.
Exactly. So we'll miss that. But also the residents miss that because it's not being marketed, right? So you're not actually competing with off-market units. It's good to know that they have those, and we can't see that from what's publicly available, but they're not actually competing for the same residents because they're not on market.
Okay, now let's talk turkey here because this is where the rubber meets the road. When you were with Enodo had really cool tools. And that's what everybody went to Enodo to take advantage of some of your cool tools. How is HelloData set up like that? I mean, what's your freemium product, I guess, and what's your how can we use you, that type of thing?
Well, there's a 7-day free trial, right? Okay. We weren't offering that with Enodo back in the day. We offer it now because no one seems to be offering that. Like no one gives you an opportunity to try it out. We feel like you should be able to try it before you buy. So there's a 7-day free trial. And essentially what you do, you put in a property name or address, and we're going to surface your most relevant rent comps. We're going to give you all the rents going back from today through June. We're going to recommend market rents for every actively listed unit in your building. So you can price based on recent updates in the market. And we're going to underwrite your expenses too, every line item. And essentially you get to an NOI for any property in any market in like a matter of a couple seconds. You put in an address, you get to NOI. And it's along the way, there's so much valuable data that you can export to Excel and do pivot tables with and analyze renovated versus unrenovated. It's really, we've gotten such positive feedback on this. Is light years beyond what we have with Enodo because AI has advanced so much since then.
Wow. And when you turn the lights out on Enodo, nobody was left there that could handle AI, right, Mark?
Right? They had a great team at Walker Dunlop. I mean, they're still.
I'm trying to create a little controversy here. trying to get on page 6 for crying out loud. Jeez.
No one can do it like we do. We're the best.
Exactly. That's what I want to hear. That's what I want to hear. So, okay, now let me ask you this, because like I'm kind of in the throes of that right now. I've got this hotel that I'm buying, 150 some odd units. We're converting it to multifamily to, so we have 150 studios. So we want to see, and what we do this is a secondary market. So what we do when we're doing the market analysis is we don't look for the studios. We look at one bedrooms, because what we found is that they're in a secondary market, you're not going to find enough studios to really give you a good comp. And the fact is that many of the studios are either really crappy or brand spanking new, and there's nothing in between. So we tend to look for one bedrooms and try to do a market analysis on the one bedrooms to see what our rent should be. How could HelloData help me with that?
So we have this unit details table that has every unit that has hit the market for your subject and all of your comps going back from June of this year to present. Every single fluctuation in price every single day and where everything closed. Right. So if it's advertised across the 7 different listing sites we cover or the property website, we're going to catch it and we're going to show you that whole history there. So if you're trying to look at like where your one bed units or your converted units should be priced, you'll be able to look at all the one beds that have leased, where they actually closed. And the critical thing, I didn't mention this before, but it's huge. It's only possible because of AI, where it's gone recently. We actually analyze the text of the specials that are posted on the property websites and listing sites. And because we're tracking every day, we know the day it was removed and which concessions were in place on that day. So we get to effective rent by analyzing the text with AI, determining this means 1 month free rent plus waived application fee, and then prorating that over the lease term. From the time it closes, we take that final closing price and deduct to get the effective rent.
Wow. Did you know you were going to be this much of a nerd when you grew up? You know, gosh.
I probably should have been in tech, but I chose real estate, right?
I know.
Back in tech now.
A perfect merger. Okay. So what you're saying then is you guys pick up concessions and you show that and you put those in the.
I haven't seen anyone do that. We pick up the dates over which each concession was available, and we know when the units closed, so we deduct the value of the concession that was active at that time.
All right. Well, let me ask you this, and I hope I'm not, delving into any proprietary information, but where are you getting the concession data? And the reason why I asked that is, I remember one time I found concessions for a property I was looking at on Craigslist. They were looking to cut corners because they didn't have any money, and so they put it out there on Craigslist. That's where the $200 first month off thing came up. Do you go that granular in the data?
We're not going to Craigslist. We do catch it if it's posted on the property website or any of the listing sites. And every time it updates, we show the date range. So we'll show like from 6/17 to 6/23 of this year, it was 1 month off, and then they changed it to 1.5 months off for a period of 4 weeks. Like that. So we're showing in that level of granularity. It's kind of like, it's hard to explain like without the visual, but essentially, we'll show one-time dollars off 200. That's clearly readable from the text, but you can't sit there and read every property website every day. We can with AI, right? And so we deduct that value from the rent that it closed at, and that gets us like the true market rent, which is what we use to train our pricing algorithms.
I'm just curious of what a day in the life of an employee of yours is like. Like, what problems do you guys bump up against? Like, hey, that algorithm's not working anymore. We got to go figure out why and go back and fix it. And
it does happen. Yeah.
That's how it's not like you built it and now it's all set and you're ready to go.
It's usually less glamorous stuff than that. It's not,
oh, jeez.
It's not an algorithm. Wow. It's not like the algorithm or the data stopped working. It's more like, oh, this guy had trouble logging in.
Oh, geez.
Why did he have trouble logging in? Oh, he's trying to log in from his phone and he doesn't have Wi-Fi. Okay, I got to explain it to him. It's not as glamorous as it makes a lot of the time. It's like, figure out each individual problem and just prioritize them well, right? There's only one, I love to say there's only one biggest problem at any given point in time. If you can identify the biggest problem and solve it systematically, then you will have a great product or great business.
That's like, what I do with the book. 10x is easier than 2x. And basically that's what they're teaching you is like, listen, don't try to get to 10x, don't try to do 10 times more. Find that one thing that is going to have the most impact and then work on that thing 10x. And that's how it's done. So, all right, Marc. Hey, Marc, what's the next step? How can people should go to HelloData.ai and then they're going to, get the free trial, and they can put in the address and figure it out. I'm telling you, I'm going to send this podcast over to my partner David Peters as soon as we're done, because he's in the process of working on that property right now, and he's going to love this information. He's going to love it. So
Yeah.
very, very cool.
No, I appreciate you having me on. Yeah, go to HelloData.ai, and it's the first thing you see. It's 7-day free trial right on the front homepage. So
and Mark, let's hope this is the last time I see you. Okay, don't go sell this one. Try it again.
No, this one's our baby. We're keeping. We haven't raised any money. It's all.
Your mother-in-law thinks you can't hold a job. That's the problem. All right, buddy. It's so good to see you. It's always a pleasure to talk to you. And I love your stories. I love what you're doing. It's the coolest thing in the world. And you're always welcome here on my show.
Good seeing you, man.
Thanks. I'll talk to you soon.
Take care.